Hello everyone, welcome to the Ichimoku Charts.com daily stock analysis for Thursday, April 14th, 2011. Well, the first stock we're going to look at quickly, and we'll go through a few of these quickly if we can, is Google, which seems to be a fairly popular stock at the moment. And we have the market in a first time frame uptrend. We have a candle that's made a higher high and a higher low. A candle that has a green body and a candle where the bulls are in control. We had the sellers lose some commitment as the market tested down here around 571, and we can see that there's good solid support down here to about 565, certainly solid support down to about 550 roughly. The market is negative in big picture terms because we're trading down below the cloud, and we're only just bullish in the medium term time frame by trading above the Kijun-sen, which is the pink line, and just bearish in the short term time frame by trading down below the Tenkan-sen, the green line. There is a possibility that the market will test above the Tenkan-sen, but that will offer itself as resistance. That's at the 580 level. So we do need to watch how the market reacts around this area. If the market does take out that area, then potential resistance up to 595, and then certainly around the cloud. Now, there is a thin area of the cloud that the market will be interacting with fairly shortly. So if the market does rally substantially, there could be a chance for a breakout, and certainly a much better chance than if the market interacts later in the next few weeks. So a market that's really bearish in bigger picture terms, but really trying to make its mind up in the shorter term, medium term and short term time frames. The next one we'll look at is Bank of America, BAC, and in the first term time frame, a market that's trending down. We've taken out some solid support at $13.16 with today's candle, but we've done that on a spinning top type candle, a very indecisive candle. Not a candle that does confirm continuation of the trend to the downside, but certainly not a candle that suggests that the buyers are coming back into this market at the moment. Very indecisive, where the bulls and the bears are trying to make their mind up. Now, we are trading down below the cloud, so the market has an overall negative bias, and also trading down below the Kijun-sen and Tenkan-sen. So the market is bearish in the medium-term and fast-term time frames, and that's confirmed by the Chikou span, which is trading below the corresponding price action. Some decent potential support down below. We have this minor swing low down around 1294 that should offer itself as support. And this area at this minor swing high, roughly in the same area, about 1288. So some potential support down around this region. That could be why we're seeing this indecisive type candle in this market at the moment. But in big picture terms, we can see the market is making a series of lower peaks and lower troughs, trending down. We do need to watch for a potential retracement back up towards the Tenkan-sen at 1348. If we see the market rally up to that area and bearishness come back into the market, we could be testing back down around this region if that scenario does happen. So we do need to watch the high of the current candle, but certainly watch the low for any potential continuation of the trend to the downside. The next market we're looking at is Apple, and we can see in the first time frame we've had a change of trend. Candle with a lower high and a lower low, a red body candle, and the sellers have made net bearish progress on the day, and they've closed this market in control. The market is trading down below the cloud, so an overall negative bias, and we had the bearish breakout here a few days ago, last week, so a bearish signal with Ichimoku chart terms. That bearishness was confirmed by the crossover of the Tenkan-sen below the Kijun-sen. That did occur within the cloud. It was a neutral signal. But this market has seen some follow-through, and the market has traded lower since then. Combined with the bearish breakout, this market is looking a little bit bearish in the longer-term, short-term, and medium-term time frames by trading down below all of these Ichimoku indicators. The Chikou span is confirming the negative price action that we're seeing, but we do have solid support down below here at 326. So we do need to be very careful when the market approaches that level. Very solid support we can see here with the market sold off. and traded up, sold off. The buyers came in very solidly, sold off, and the buyers came in once again. That area did correspond with the bottom of the cloud. Now, if the market does rally from around this region again, then we should look to resistance around the Tenkan-sen initially, 337.31, and then certainly at the cloud we have very solid resistance offered by the cloud from 343 all the way up to about 352. The next we're looking at is Goldman Sachs GS, and we can see that the market's gapped down and creating a window. So in candlestick terms, we will have potentially strong resistance if the market does rally between roughly 159 and 157, the high of the current candle. So the market is trending down. Previously we were trending up and we saw the market find resistance at the cloud, now trending down and testing support down around this region around 155, extending down to 153. So very solid support in this area. Wouldn't be surprised to see this market rally off these support areas. A bearish candle. The sellers are in control. The sellers have made net bearish progress, and we can see the small shadow on the bottom where the sellers lost a small amount of commitment, although it was only a small amount, as we tested down around this support area. Bearish in all time frames by trading below the cloud, below the Kijun-sen and the Tenkan-sen, and the Chikou span trading below the corresponding price action is confirming the negativity we're seeing in the market. But a market where we see solid support down below, but certainly decent resistance overhead offered by the Ichimoku indicators and the cloud. The next we'll look at is Research in Motion, RIM, RIMM, and certainly a market that's in a big picture downtrend. We have a series of lower peaks and lower troughs looking very bearish. Today we had a change of trend to the downside with the market making a lower high and a lower low. However, this was not a terribly bearish candle. The trend to the downside was not supported by the bears. The bears actually lost commitment as the market tested down below 53. So 53 is a very important area for this market. During the trading day, we actually had the bulls close the market in control. So the bears are not supporting this trend to the downside. In big picture terms, we're trading below the cloud, so an overall negative bias. Also trading below the Tenkan-sen and Kijun-sen, which means the market's bearish in all of those three time frames, and confirmed by the Chikou span. A bearish in market in all time frames, very bearish, very large window here that will offer itself as a resistance if the market does rally. Good solid resistance offered at the Tenkan-sen. We saw the market find resistance at the Tenkan-sen yesterday's trading. Certainly good resistance offered at the Kijun-sen, which is at 58.65, and then up to the cloud, but that's a long way away from where the price action is. Looking a little bit overextended, however, by trading a long way below the cloud and the Kijun-sen, so it wouldn't be surprised to see this market rally somewhat, and these two candles with sellers losing commitment perhaps offers a little hint to that, but we should never preempt the market. We should watch for any potential higher high and higher low, and watch for a test at the Tenkan-sen.